What's that, everybody? It's your boy Creative back at it again with another algo hack. Now, today we're going to be going over part 2 of our video in order for us to build our options algo strategy. But before we get into that, I'm going to be using ChatGPT in order for us to really understand what is an algo. Now, I need you to stay tuned for the full video because at the end, I'm going to be showing you a little snippet of our backtest so you can see the algo's performance so far. So what is an algorithm when it comes to options trading, right? So an algo is a set of instructions that we give a computer so it can trade options for us automatically, quickly, and without emotions. It's like giving a robot a recipe. If this happens, I need you to do that. If the price goes up here, I need you to buy. If volatility changes, I need you to sell. If I lose too much, I need you to stop, right? So the robot follows our instructions exactly every single time. So let's go ahead and go to our first algo bot. So what we're going to do is go over our steps that we've done in order to develop the strategy. What we're going to be using is QQQ. QQQ is the top 100 tech companies within the NASDAQ, and our strategy is going to be called Early Worm. We're using 0 DTE options. These are options that have 0 days to expiration, meaning that they expire the same day. All right, so why do we select QQQ? Because it is one of the most actively traded ETFs, ensuring tight bid and ask spread. And again, it's the top 100 tech companies within the NASDAQ. And this step 2 talks about a little bit more about the strategy. I need you to hold on because we're going to be going over this when we talk about our back test. Step 3 is the signal detection. So it lets us know a little bit more granularly how our rules are going to work for this particular strategy. Step 4 are the strategy parameters, right? And letting us know, all right, this is the RSI that we're not going to be using. This is the volume multiplier. This is the candle size that we're looking for. The trading sessions, we only allow 1 trade per day. This is how we select the option. These are our exit rules. Step 5 is how we position size when we actually find a signal, right? Why this works is because small accounts need to grow aggressively and larger accounts need protection. So let's go ahead and go over our back test. So what is a back test? A back test is being able to take your strategy, drop it off in a particular year, and seeing how well it performs. So this strategy overview, let's talk about it a bit. Think of it like a surfer catching a wave at the beach, right? We wait for the market to open at 9:30, and once we see a big wave, the price movement that's bigger than the small ripples before it, we jump on our surfboard and we buy an option and ride it for a few minutes. So this is how it works. We look at the 1-minute bar chart from 9:30 to 11:12. We find a current bar that is 2 times bigger than the last 5 bars. That's our wave, right? We check our volume just to make sure it isn't too crazy. And then we buy a call if the price went up. We buy a put if the price went down. We hold the position for a maximum of 5 minutes. And then we sell if either our TP or our take profits happen or our stop loss comes into play. Now, I need you to stick around after this because I'm going to be showing you a small snippet of the back test. Now, part 3 is going to be going over running the back test and actually seeing how it performs. Now, it's your boy Creative. Don't forget to like and subscribe. We'll be back again with another episode.